2020 was nothing but unusual, really in every way imaginable. Suddenly everything stopped and industries were wiped out. Stocks climbed thanks to the destruction of the value of the currency. Sports gamblers turned their focus to the stock market and suddenly became gurus overnight. It's important to have an understanding of where you are at now to know your direction in the future. That's what we'll get into. You came here for the truth, so let me unveil that for you. I want to remind everybody that what we saw here in 2020 was an entirely different scenario than what I've studied in the past. It is an anomaly, completely an anomaly if you look at the data, if you look at the details, and if you studied the historical texts. I've been doing that. I know a lot of my subscribers have as well. People will say, well, you know what? Facebook wasn't around back then, so obviously Instagram is a really cool app and deserves to be valued at billions and billions of dollars. Netflix is so fantastic, and 7 shares of Amazon and all this nonsense. But we have to understand there's always new technologies. The stock markets have been around a long time, and these financial markets, no matter where you look, in all different levels, have been around a very long time. Understand that there are always going to be new technologies that come out. Facebook and Instagram 20 years from now might be entirely irrelevant, probably will be entirely irrelevant, but you look at different things that have come up along the way, and as we include that and as we think about all of that, it still remains that this right now is the most ridiculous and overvalued market, but that does not mean it can't go higher. We must understand that distinction because of what's happening to the devaluation of the currencies. Goldman Sachs right now does believe that the market will be going absolutely berserk on the way up, that is, as you know, we move through 2021. There are other banks, in fact, most believe that the gains of 2021 will maybe not look quite as healthy as 2020 when you see from the lows of March up until the top, but it just gives us an idea of where they expected to go. But they, of course, had never been able to predict anything ever, so we don't necessarily know what's coming. But I'll tell you right now, you should see all of the data and decide for yourself where you want to put your money. CBOE options total put call ratio right now, people are the most bullish ever. Nobody's shorting the market, and even though the markets continue to escalate higher and higher and higher, more people are simply moving their money in. This goes from the average investor, the retail investor, all the way up to the central banks. They are all putting the money in. 4 charts right here, top left corner, essentially showing us the data from the EPFR, highlighting the fact that we have a huge swing of money. It's going into global stocks, the largest 2-week inflow into global stocks ever. I do believe that's a few weeks old. I'm not sure, it doesn't tell me on here, but I had covered that previously. Top right corner sentiment indicator. This is at a historic high right now. Looking at the bottom left corner, percentage of respondents who believe the next 10% move in stocks will be up. That's at approximately 62%. Of course, who believes it will go down? Well, you've got in the bottom right corner there, the actual S&P 500 short interest continues to fall to new lows. Nobody at this point is actually putting their money into what they believe is going to be this downward spiral because it's all on the way up. They're putting their money on those bets instead. Look at what happened with Tesla stock. People have been shorting it. I think it's something like $38 billion worth. Just people are just losing like crazy trying to bet against these stocks, no matter how exaggerated and how, in my opinion, in some cases, some of these stocks out there undeserved. And you just see that it's all unicorns and rainbows, but don't forget about the kittens. Goldman Sachs housing activity tracker, housing sales and starts have surged. You can suggest, if you want, that there's all this pent up demand and everybody is moving out from one place into another right now. That as far as I'm concerned, is not the case, but there is certainly migration that's happening from the major cities, the urban centers, from those apartments, and they're moving into, you have a lot of people buying into the suburbs and so on. I don't think it's as excessive as they have made it seem, but certainly there has been big changes in that respect. 4 charts here, just acknowledging what's happening with top left corner. Housing starts, single family housing starts are up year over year. You could look at that, it just shows us that it was really, really down at one point, but things have changed. Bottom right corner shows us the pending and existing home sales, very erratic for 2020. As I'm sure you're aware, there was no showings, there was no business, there was no movement towards the beginning of the year. And then suddenly everybody was working from home and they're going to be having the fantastic life, but they're not going to be able to do that in a 2-bedroom apartment with 3 kids. So they had to move out into the suburbs. And this created a different scenario than what the market was comfortable with. As I said, it's an anomaly, this case, many ways. So we're looking at this data coming through, and there's a few charts here if you want to take a look. Inventory of homes available for sale, looking at what we can see over the past few years. Certainly a difference, certainly a change at this point in time as you look how many people were putting their home up for sale in certain areas, and then suddenly the more desirable places, maybe they had a little bit more land, maybe an extra bedroom or 2 in the house so they can have a home office or a place for the kids to do the virtual school. Those areas there started to become in short supply. You can look at the market as a whole, see a different picture, but regardless. And also bottom right corner, months of supply of single family homes. Taking a look at that as well, you could see that it has been declining right here, 2020. There's no doubt about it, but you got to take each city for what it is and look at the statistics in a different area, because quite frankly, it doesn't matter what's happening in San Francisco. If you look at some other city in Houston, Texas, for instance, the two just don't really factor into each other. So seeing it on a national level isn't that helpful. So I don't want to spend too much time, but I want to highlight that when you are looking at the stats, always make sure to go down to your city level. Yes, maybe your state, your province, your region does have a general impact on what's happening in your city, but you want to see certain stats at the city level and even further down if you can get them. Taking a look at these charts here, essentially top left corner, primary and secondary mortgage rates. Primary mortgage rates have declined to below 3%, of course, and this continues on and on. And top right corner, jumbo versus conforming mortgage rates. No matter where you look, the rates are going to be different, obviously, depending on your situation, depending on what's happening, but the rates have been declining, and it's been doing so for decades, as you know. Then you're also looking at bottom right corner, percentage of outstanding 30-year conventional mortgage in the money for refinancing. 80% of outstanding 30-year conventional mortgages have had at least a 50 basis point incentive to refinance. Many people are doing that today, and for obvious reasons. No video would be complete without talk about the central banks, and we're looking at what the Federal Reserve has done. It is a complete embarrassment and a rejection of all reality that most people simply ignore. Federal Reserve holdings plus commitments to buy agency mortgage-backed securities. The Federal Reserve holds over $2 trillion of agency mortgage-backed securities. You could see the spike up right here over the last few months. It continues to grow. Every single month they're buying more and more. This is supposed to support you, the average person. Buying mortgage-backed securities is supposed to help you as the individual out. That's what they tell you, and they might as well be spitting in your face. Federal Reserve gross monthly mortgage-backed security purchase volumes. The Federal Reserve purchased over $100 billion of mortgage-backed securities in November. It just tells you that what they're doing here by buying $100 billion in a given month, $100 billion. I didn't realize it was that much, but you look at the balance sheet and what's been happening, which I'll show you in just a second. It's expanding. I guess it's got to come from somewhere. So we're looking at how truly ridiculous and excessive this is. My goodness, I mean, it is just unbelievable to see what they're doing, and at the same time telling you that it's for price stability and trying to keep full employment. I mean, why would they say that? It's so ridiculous. I don't have words to describe what kind of ridiculousness that is. That's all I'll say. If you want to actually get the details of what the Federal Reserve is doing, at least what they make public, do not go to Bloomberg, do not go to CNBC, do not trust what I tell you. Even though I show you the actual sources, you can go to the source for yourself. federalreserve.gov has something called the H.4.1. Okay, so H41, you could just type it like that. The Fed, you will get these, they're constantly being updated, and you can actually see for yourself. The entire thing, all their different programs that they're putting out right here are listed, and you could read it for yourself, and you could see. Don't trust me. Don't trust what you see on any of those news sites, because you don't know which information they're quoting. You don't know where exactly they're getting it from. Did they type it in wrong? Is it a typo? What's happening? Always go direct to the source. I always urge that, and I always encourage that you tell me if you see that I'm not going directly to the source. If you could say next time, could you show the actual real source of that information? Because I noticed you pulled the Bloomberg article and so on. So if there's a way that I can absolutely get that, I will. And if I don't, I want to be held accountable for that, because that's what I do on this channel. Of course, the vast majority of people, quite frankly, don't care, but that's what I want. I want you to give the media, alternative media especially, I should say they're all doing it now, but they refuse to give any sort of source. They tell you things, they tell you nonsense, and as long as enough people are repeating it, that's it. It becomes true, but quite frankly, it's not. Anyway, you could see the newest numbers as of the end of the year. You're looking at $7.4 trillion. $7.4 trillion. I mean, it's hard to believe. I really don't know how far they're willing to take this. They say they're going to go well above 10 trillion, so we'll see what happens. But it's 7.439, and it continues to grow. That's the total. They added more billions this week. You could see the breakdown of all of the different programs, whichever you're interested. I'm not going to bore you with all that, but clearly there has been an excessive amount of growth in their balance sheet. They're buying up stuff they tell you is for one thing, but clearly that's not the case. Unprecedented central bank asset purchases over the last few years. The chart goes back from 2006. I want to highlight obviously what's been happening in 2020. It has made the previous ramp ups seem like nothing. You could look at it, just see what had occurred, how far this has gone. It's unbelievable. G10 total, that's the red line. And then you're looking at the BOJ, the ECB, the Fed, and the others. And it just gives us a little bit of shock to look at what they're doing and then see, well, what are the effects of this? Obviously, a devaluation of the currencies could send certain assets rocketing higher. Goldman Sachs loves to claim that what the central banks have done stabilized the financial markets and brought the most accommodative financial conditions on record. That's unbelievable to see. All you needed to do was print $20 trillion globally, and you can stabilize the financial conditions. Well, what happens the next time there's a crisis? Oh, everything's going to turn out just fine, right? Rental vacancy rate. You can look at what's going on there as well. That has been declining over the last few years as the mortgage rates have been going down. More people have been getting in. There are other factors as well, because mortgage rates were rising for a period, but still on a historic level, they are very, very low. People have been getting into what they believe is the American dream of home ownership, And you could look at the stats on a national level, but certainly you could see this on city levels and see that there truly are variances in between different areas. More bubble talk here. You look at the house price appreciation accelerating to a double-digit pace in recent months. That is completely unjustified, uncalled for, and you look at it on a historic basis. You see the irrational exuberance that Alan Greenspan talked about, and here it is today in none other than home prices. Last one I will touch on just shows us Robinhood payment for the order flow by venue. If you don't know what I'm talking about here, essentially Robinhood, they are a free trading platform, but it's not actually free because what's happening is your data, your trades are getting sold off to companies like Citadel, like G1X, Wolverine, and so on. And you look at what they do, essentially front running all of these trades and profiting off of all of them. They use the high frequency traders to see what you're going to do before you're even able to do it and then buy from that. And they are creating a bubble that is unlike anything we have ever seen, using the retail traders simply as not bait necessarily, but they are actively using them for their own advantage. And it is creating a wild, wild ride. No doubt. That's all the charts I wanted to cover here, just showing you what's going on in 2020 as we're now in 2021. You can look at how crazy this has all been and what we can expect for 2021. What do you think? More of that insanity, or will we see some reality? That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. Thank you very much. If you want to learn e-commerce, you can learn for free at my website, theamazongps.com. And if you want to know what's going on in the financial system, you want to understand it, or you have a family member or friend or coworker that needs to know, definitely check out that link in the description. If you want the audiobook, themoneygps.com. And last but not least, if you have not seen this video, highly recommend checking it out. Click it. I'll see you there.